Faites autrement.
Hello everyone, my name is Aya Ramoun and I'm a project manager at the Junior Entreprise EPFL. I am here today with Gaspard Peduzzi, CEO and co-founder of APWine, and with David Muller, jurist and vice president of the Junior Entreprise EPFL. So first of all, I would like to thank JEW for hosting us and giving us the opportunity to have this event. I will start today by presenting our association. After this, Gaspard will present APWine, and we will then have a roundtable with David and Gaspard to discuss the challenges of entrepreneurship in the cryptocurrency world. So at the end, we will have 30 minutes for the questions, and if you have a question, you can also ask it during our roundtable. So the Junior Entreprise EPFL is a non-profit association with with volunteer project managers. Our goal is to connect students with professionals around various projects. So today we are going to talk, like I said, about entrepreneurship in the cryptocurrencies, and I will let Gaspard continue with the APWine.
Sure. Hi everyone. Thank you for the invitation. So I'm going to start with the quick introduction about blockchain and cryptocurrencies, because apparently the audience is not that familiar with it. So you're surely familiar with the terms of like Bitcoin, Ethereum. You may have seen that on the news, like a lot of people talking about it, even influencers, just very various people, not necessarily technical ones. And but in a few sentences, that's an ecosystem that has been growing for more than 10 years already, and it's about building a layer, an infrastructure layer that allows you to transact value in a permissionless way, and you can also build a lot of decentralized protocols like APWine, like the one that I'm going to introduce you to. And that's something that has changed a lot over the years. So Bitcoin, Ethereum, what are those? It's basically decentralized network, and you have a native currency on it, and it works in a very much decentralized and permissionless way. And it has a censorship resistance as well, which is why so many things are being built on top of it. And what we had for the last 2 years is crazy interest about building financial products on top of first the Ethereum blockchain, but basically this whole ecosystem that we call the decentralized finance. And the way that works is that basically you can build autonomous program there, and eventually people started to build things that very much look like financial products, loans, derivatives, decentralized exchanges. And all those protocol requires liquidity. It's basically some kind of peer-to-peer finance, right? Instead of going to the bank and asking for a loan, you're asking for a loan on a protocol, and someone else will provide the liquidity that will be used to provide the liquidity of that loan. And so it started with very simple protocols, and it started to grow in a very complex ecosystem and different layers of integration. Usually people talk about that like it's money Lego, because everyone is working on some parts of this space, and then they plug themselves on top of other protocols, and just a lot of synergies there. And eventually it became efficient in the way that we are talking now about like centralized infrastructure against decentralized one, and it's not really like some kind of war, but mostly some kind of arbitrage opportunity between something that has been running for a long time and that is very much permissioned and that works with a lot of constraint, and something where people were able to create very much free and creative layers of tools in the financial world. So I'm going to introduce APWine really quickly. So basically what we do is we create a layer of derivatives on top of interest rate. So I mentioned that in the... Yeah, that was a good button. So I mentioned that in this peer-to-peer finance, we need liquidity, which means that to provide liquidity, and the liquidity provider, as we call them, they need incentives. They need something in return. Usually, when you make a loan at your bank, you pay some kind of interest rate. Well, that works exactly the same way. But the thing is, the liquidity that we have in DeFi, decentralized finance, is volume way lower than what you would have in traditional finance, which means two things. It means that just like the cost of liquidity is much higher, and the volatility of those interest rates, who are adjusting themselves dynamically with the demands, basically. So those interest rates are extremely volatile. And in the traditional finance, you have a lot of tools to speculate on the variation of those interest rates. Tools of different kind. It could be futures, options, swap, even more complex one, and then you have tools built on top of tools. And basically, in DeFi, we had, so when we started the idea, it was August 2020, and we had what we call the DeFi summer. Basically, all those new protocols started to launch and had crazy attention, and because it was very dynamic and a lot of demands, then the interest rates were going through the roofs and just being extremely volatile, which was a very great opportunity for a liquidity provider, because then they would deposit like liquidity on pools and earn a lot of interest on their deposit, way more than what you would have in traditional finance, of course. But that was very volatile, which eventually is good for traders, but it's not necessarily good for other types of stakeholders, especially users. Imagine that you take a loan at the bank and that every day it goes like from 10% interest rate to 50, then to 2, then it's quite volatile, and we did not add any way of speculating on the variation of those interest rates. On the other end, traditional finance has a lot of tools to do that. So that was the issue that we were trying to tackle, and we came up with the solution that was yield tokenization. So tokenization, it's the way basically a lot of blockchain projects are creating tokens, which can represent different things. It can represent commodities, securities, utilities. It can represent a yield, a right to own something, anything. And we did the exact same thing with the yield, which meant that eventually liquidity providers were able to deposit on different pools. They were able to provide liquidity for those loans, for those decentralized exchange. And we created a derivative just on the yield part and on their deposit, so to make that tradable in advance. And it worked at first like a future contract. So a future in finance, it's an escrow between basically a buyer and a seller for the exchange of an asset at a particular date. So basically, you're bearing the right to own something at a particular date, like starting from a particular date. This exchange is made in advance. And so we did that with the yield, which kind of is like some kind of advanced paycheck mechanism, basically, for liquidity providers. So that's something that is very common in the US, for example. So you can go to an office, an advanced paycheck office, and you say, well, here is my salary, my contract, everything, and I need that money in advance. I know that I will have it at the end of the month, but I want it now. So they will give you the money with a discount, of course, and then you will be able to earn your money in advance. And so that's the first product that we did. So that was the beta interface that we launched on mainnet. So mainnet means like in a production environment. So that's something that we launched, and we just wanted to battle test the concept a little bit, because DeFi is still a very new space, and which means that building more complex products sometimes require the community and all the user to adapt in a period of education, basically. So we launched that on mainnet. So in a few days, without any incentives or marketing, we had 5 million deposited on there, and people trading those future interest rate. And we paused deposit because we just wanted to have a few, a low amount of volume to be able to iterate on that without making a big deal of a first version. And then how it worked. I'll go quickly on that because that might be too technical, but basically what you do is you deposit an asset on a platform usually, and you earn yield against it. And we say, well, do that through us, and when you will deposit the liquidity on the platform, we'll give you two things. We'll give you a token that represents the deposit, and we'll give you a token that represents whatever yield the deposit will generate by the end of the period, which means that with this some coupon kind of thing, the liquidity provider can just sell this future yield token, and whoever will buy it will first be exposed directly to the yield. They will just buy the yield that will be generated during that period, and they will be the one being able to redeem the yield at the end of the expiration. Which meant that for the first time, liquidity provider had the opportunity of hedging their risk, selling their yield in advance, which was good, and which is good in an environment where the yield is extremely volatile. And on the other end, the trader, they were able to be exposed to the volatility directly of the yield, buying directly the yield, which was like some kind of leverage exposition. Oh yeah, so I did not do the slide, but there were some fancy stuff. And so the fact that we were tokenizing something is the core protocol. It's like we build those derivatives, and we write basically those autonomous software that allow you to do that without our intervention, and that works in a very autonomous way. But on the other hand, when you create those derivatives, even though you're using the same token standards that can be traded everywhere and so on and so forth, we needed to build a marketplace for that. We needed to seed a market for that. And in DeFi, there are something called automated market makers, which are a very efficient way, for the space at least at the moment, to provide liquidity and to basically make market making. So it's some kind of decentralized exchange. So we needed to build that as well, but because it was a yield-bearing asset with different types of properties, we needed something very efficient, basically, for the liquidity provider, because we wanted them to have the most efficient and profitable experience as a liquidity provider. It's a cool one anyway. Yeah, so we started in August 2020. Then we launched this that beta version on mainnet in February, and then we made a lot of iteration. And so currently we're in the process of launching the full version, including other features that were not available before. And this V1, as we call it, will include the possibility of trading on lots of different pools with some quite novel governance mechanism. And yeah, so we're excited to release that soon. And thank you. So yeah, that was the short or not short introduction.
And thank you very much for your presentation. So do you have any questions for the moment?
Well, Binance is doing these futures instrument on normal assets, and we do futures on interest rate, on yield, basically. So, and another thing, Binance is doing that in a centralized way, and we are building a decentralized protocol. So you have decentralized protocol that are doing futures on assets, which looks like quite similar from the futures that we have in Binance. But we do that on interest rate. Like you're not playing with future on the price of Ethereum, for example. You have a future that represents the yield generated by one pool, like the interest rate. So yeah, that's quite different.
Okay, and are you also doing that for stacking the tokens?
What do you mean?
So I understand that it is also for liquidity providers. But for example, if you have a token that you stock in a platform, you will gain some tokens back, meaning that you will have a yield in the future that will come each day.
Yeah, definitely. So there are different types of yield. As you said, there are the yield that you have as a liquidity provider for example, decentralized exchange. So that's particular types of liquidity providing. You have yield that you earn on other types of platform like Aave, like loaning platform, and you have yield that you earn staking tokens, which can be governance token usually, but it can also be I mean, which is some kind of governance token, but it can be ETH 2.0 rewards, basically. And so yes, it's a very modular infrastructure, and we can tokenize basically everything. So we can create pools, and you will be able to trade in advance the protocol reward of Ethereum, for example, and not only directly on APWine. And it can be different other protocol. For example, we're integrating 2 protocols called Harvest and StakeDAO, and both of them have a governance token that generates yield through staking, and you will be able to have features on that as well.
Okay, I see. Well, it's not working. Okay, I see. So, and I have one last question. How internet loss is reflected into your model?
Well, so first, I think to introduce that to everyone, impermanent loss is basically when you provide liquidity on a decentralized exchange. Some of them, at least, requires you to put 2 assets, a quantity of 2 different assets, and this quantity is evolving during the time. And so, of course, you earn fees, usually trading fees. That's your incentive to deposit. But eventually, if you compute how much money you would have had if you just kept this quantity of those 2 tokens, then sometimes it would have been more worth it just holding those 2 quantity of tokens, because like the quantity changed in the pool because it is used for different things. So that's basically impermanent loss, very not well explained. But the thing is, we have an AMM, so we have the same thing, but we have even another thing on top of that, which is we have assets that are generating yield, and those assets you're providing them to the AMM. So if you don't know anything, there will be arbitrage opportunities, which would result in more impermanent loss for the liquidity provider. So what we're doing is we did quite some research on implementing some kind of weight shifting mechanism on the AMM to reduce that impermanent loss a lot. I cannot go too much into the details because it's complex enough, but we have a documentation on the AMM where we describe the math that we did to achieve this most efficient way of basically solving impermanent loss for those type of assets.
Yes, a question here. Maybe more on the entrepreneurship side. Can you maybe share how you were able to steer the community interest in the protocol to be able to reach the 5 million TVL?
Well, I mean, yes. To be fair, 5 million TVL is not much in DeFi right now at all. But it is if it's a non-incentivized beta, because I mean, people are expecting things like you may have heard about airdrops and that kind of thing, and that's something that we announced that we will do retrospectively. But yeah, I mean, we create like when you create a DeFi protocol, it's not a regular let's say startup. Like you don't want to answer the need of a particular investor. You want to answer the need of a market and a community. And so yes, there was I mean, at the time we were not focused too much on marketing, but progressively you try to be transparent, to give updates, to communicate to the community, but not only, you want them to have an impact and a value in the governance of the protocol. You want them to make proposal, and I mean, we wanted to have the full version live, but we'll have governance at that time, and people will be able to make improvement proposals and iterate on that, and there will be key stakeholders of the protocol for sure. I mean, they are, and they will be very important actors. And I was just totally far from your question, but basically, yes, the community was very important, and since day one, we shared updates, and we had quite a lot of interest into the product and what we're building. We still have, and we have also, and that's something maybe that we can discuss later, but very helpful investors that are quite involved in DeFi, and that helped to spread the word and to explain that to people and to get them to know APWine as well.
From your point of view, what are like the main differences between entrepreneurship and, let's say, normal startup dedicated to a whole business, and entrepreneurship in cryptocurrency, and especially DeFi, because it's decentralized, it's also meant to another target audience. So I guess it's really different, and I would like to know your point of view about it.
Well, to be fair, I did not really had any experience in the traditional startup environment, so the comparison would be hard. But what I can say from what I learned before and what I had, what I'm doing, is that we're working in an ecosystem that is extremely dynamic and goes extremely fast. So you need to be competitive. You cannot afford to lose time. And then there are some pros as well. Like everyone is raising money. That's an easy process in cryptocurrency. That's known. And I mean, during different phases, like during bull markets, it's easy. Everyone is throwing money at you. And in the bear market, you're just a scammer. Like you cannot tell. Okay, that's a label that you have on you. And so basically, so you're quite dependent of the market because it's still new and it's changing a lot. Then when you're building a startup, you need to build a team. And finding people available and with experience and skills that you need, well, every other project, they just raised money and they're doing exactly the same thing. So that's very hard. And so you're basically hiring people from all across the world and just trying to find one developer, like one Solidity developer, and that's quite hard. But then at the same time, I feel like because we're like, when we launched the thing, we were the very first one mentioning this idea of yield tokenization, of building derivatives on yield, and at the same time, it's a small world. Like you get to meet everyone that is building by your side, like all those big protocols, and you know them, and you meet them at conferences, you talk, you make friends, and that's such a good and positive thing to be able to, you don't need to go through all those formalities and waste time in building a reputation before being able to talk to someone. If you're interesting, they listen, and that's such a great thing. Like the dynamics of this ecosystem are amazing, and it's very, very good.
So if there is no more question, we will proceed with our questions. So when did you start working on the project?
So during exams of August 2020.
So how this idea came during your exam?
Well, I was trying to do something else than my exams, and as I said, there was this Defi summer that was happening, and yeah, I mean, I had a friend, and we were just at Les Trios searching for an ID with a beer, and just basically, like, that came up because of this exact. Like we realized that there is no way of speculating on the variation of those APYs, no way of hedging the risk on those, and there was like a whole layer, a whole market missing. And so I thought about, okay, how can we tackle that? And eventually the future instrument that we built was not even designed to be a future at first. It just made sense to build that way. And then eventually we were like, okay, but do we just build a future, basically? And so if we build a future, then what else can we build? And we iterated on that, and yeah. That's it.
Okay, so at first you just had the idea, but I guess there's a lot more. So what were the challenge you had at this moment?
Finishing my exams, and then, and honestly, I mean, when we had the idea, we were like, okay, it's either super interesting or we are not saying something, and we were like, okay, let's just try to do it eventually, and we'll see. I was with two other friends, very talented people, and we already participated to some hackathons or things like that, and we're like, there is no hackathon, but let's just try to build the idea and see where it goes. And that's what we did. I talked to a teacher I knew that was doing in the course financial application of blockchain technologies. I worked with her on some research thing, and I told her about the idea. She was like, yeah, it's interesting. Then we started to build that, and like we wanted to have some kind of alpha version on testnet, which is like the testing environment for all those things. And so we did an alpha, and then at some point we talked to Mark Zeller, which is an important person in the Aave protocol, which is one of the biggest DeFi protocol, and yeah, we iterated with him, and we were thinking about, is the market ready? Is the idea good? How should we design the thing? And we kept iterating, and when we launched that alpha version, then eventually we had the plan to put it on mainnet, like in a production environment. But if you need to do that, I mean, if you want to do that, then you better pay for audits, which are extremely expensive at the moment, and we did not have that much money to spend on audits. And as well, if you build a decentralized protocol, then eventually you want it to be decentralized, so you need to have decentralized governance. So currently it means launching a governance token, or something where people can vote in a decentralized way. And so if we were going to issue that, then we wanted to do that legally, and so we needed to pay for lawyers as well. And then we wanted to have a company, but if we like to have a bank account, if we had grants or something. But then if you have a company, then you need to register it, open a bank account, and then it just started to happen. And we had an angel investor that came quite early in October, and so it was a very small check. It was 50K, and that was enough to pay for incorporation, lawyers, and a small audit. Then we did a second alpha version, and then while the audit was going on, we reiterated a little bit. We launched this beta version on mainnet, and at that point, we already made quite some iteration. We had quite some vision about what we want to build, and we were quite serious about the fact that we wanted to launch this protocol, going full time on it, and hiring more people, and we knew the needs and where we want to go. And so that was February 2021, and so we did a seed round. A 1 million seed round. That was a very interesting experience, and that was the opportunity of basically increasing the size of the team, because it was not like just ventures or hedge funds. There was not hedge funds at all, actually. And so mostly ventures, but we got to choose them individually, and we had actually individual investors that were like big builders in other protocols, and that was very interesting and very valuable for the project. And so, yeah, I mean, that was the first, until the seed, that's what happened.
Okay. So thank you for your answer. You talked about the creation of startups. I will let David explain us a bit more how this works in Switzerland.
Yes, perfect. So in Switzerland, we hear a lot about startups, so it's a name really known, we'll say. And as you said, it's not an ordinary startup because of the blockchain. It's a bit different, as you said, as the community and things like that. But globally, a startup needs money. So to set up a company and other things. So there is always a race for money. So financing is really the issue, I'd say. You talked about the seed stage. So there are 4 stages of financing for startups. So the seed stage, the initial development, and also the development phase and the maturity. So if we talk about the seed stage, it's the moment where the startup, will say, is mainly focused on R&D and finding investors. I don't know if it was the same for you. So, well, if you want to answer.
No, sure. For the seed, yeah, it's definitely. I mean, once we had already a beta running, and we just needed to scale, and so yeah, that was the seed. We wanted to be conservative on the amount raised, and just make iteration of raising more money later if we need to. Yeah.
Exactly, and you speak about 50K, so it was enough to create, to set up your own company. So it was limited liability company or a limited company. So which legal form did you choose?
So we incorporated the company in France, and it's a Société par Action Simplifiée. Okay. And yeah, that was enough just to cover, legal cost and first very small audit. But then we were not paying any salary or anything at the time. It was just, not to pay that by ourselves.
Yeah, exactly. So for startup, cash is king. So effectively, that's something we hear all the time. And effectively, the idea is not to pay salary too early, but to raise money to finance the purpose of the startup. And there are also other stage of financing. So we talk about the seed stage. So it's quite a stage where there is uncertainty. So the product is not yet ready. It's not always ready to be launched on the market. So there are less chance. So there are would say less chance of success. So it's the riskiest phase of the life of the startup. But we have also so yes, in the seed stage, the aim is really to raise the capital, the seed capital, we call it, to set the startup. As you said, you did with, so you went with a company in France. But do you have now a company in Switzerland, which is incorporated in Switzerland, or not really?
We are setting up a branch here.
Okay. So perfect. Yeah, a branch is a nice choice, we'll say. And so generally at the seed stage, we're talking about the 3F, so friends, family, and fools that are, we'll say, too crazy to invest in the adventure. But as you said, you also had a business angel. So it's kind of always the time. So it's the best way to go on. But there are also, as I said, other financing stage. So the initial development, or also called the early stage. So it's quite a bit also a stage you're in, because I think thinking about what you said, you're a bit in between seed stage and initial development, because you already set up the company, and you have quite a prototype that is ready. You talked about the beta version and the V1 also, so you're quite in this area. And the idea is always to raise funds to go on with the startup and develop the business. And that's something very interesting, just to have some key, I would say, in Switzerland, the average of financing in the initial development is 3 million Swiss francs. So, and I think that's something you raise quite.
If I can complete, I would say that. So, as I said before, in like the cryptocurrency ecosystem, depending on the market, it works a bit differently. The seed was 1 million. Then we did what we called a liquidity bootstrapping event. So basically, when you launch the token, you want to seed the liquidity on some kind of decentralized exchange, so that people can buy it, sell it, and just you want to create liquidity there. And that event allowed us to raise a few more millions. And then the thing is, when you seed liquidity on a decentralized exchange, basically you have two assets. We have two assets, and it's Ether and the APWine token. And then you depends on the price of those assets, and it can go good or bad, but it went good. So, So we have a few more millions in the treasury right now. But effectively, that launch is a bit something different, I guess, from the regular startup world.
Okay, perfect.
So thank you both. Could you tell us a bit more about the raising process?
Which one? First one, angel investment. It really depends on where you're at the market. Even in October 2020 was quite different from today. We've seen that in the amount of money that projects are raising, and now the pre-seed are made just before the seed, and it's almost the same amount. 50K at a time. Honestly, I just sent him a message on Telegram because I met the angel 3 years ago in Slovenia, and we had a 15-minute call, and he was on board. So that was the pre-seed. And then the seed was very time-consuming, but I learned a lot because I never did that before, and I mean, when you start, at first you're like, okay, so we need investors, and you're like, investors are equal to money, but eventually they're way much more. And you want to pick investor that bring value to the project. You want to pick investor that have the correct behavior with the fund that they invest in your company. You don't want people to invest and sell it right away for a quick profit. And so eventually we were quite oversubscribed, like 10 times the amount of the seed, and at least, but everyone was. And so we decided to go with an approach where we had a lot of calls with a lot of people, but we were choosing particular individuals. They had very small allocation, but with this very small allocation, they were able to do so much more than what just a venture would have done. And we had some venture, but they were exactly the one that we needed. So yeah, you're basically making calls. You have to take a lead eventually. So like the lead takes usually the biggest tickets, and they help you through that process of raising the whole allocation. And so, yeah, you make a lot of calls, you pitch them the project 10 times a day, and then they make an offer, and then you negotiate, because it depends. You want to allocate something to the fund that corresponds to what they want. Because if they don't have enough, they will not invest themselves that much in the project, so that would be useless money. And if you give them too much, then that's just a waste, because you could have allocated that amount to other investors that would have brought things to the project. So yeah, you have a cap table and you're playing Tetris the whole day trying to fit the allocation, and eventually you're like, well, it looks good, and not everyone is happy, but we're happy, and let's close it and move forward. Because that's very time consuming eventually.
Okay, but just to be sure I got it right, so you got into a venture, or you didn't pass by this process?
So the seed round was led by Defi Digital, which is a very known venture in the DeFi ecosystem. They invest quite in a lot of projects, and they have different branches like DeFi, Delphi Labs, and just a lot of branches, and they're very active in the research process as well. And so we met them during the process of the seed, and they helped us, and we decided to give them the lead. But those were not the first one that we met. People came, and we took calls, and we took a final decision at the end. We did not assign anyone before being sure that the final version of the cap table looked like the one that we want.
Okay, and when you get into this startup, did you pass by EPFL, or you passed yourself?
No. No, for several reasons, but I think the main one is because the space is a bit new and all. We wanted to have help from people that are already in it, because even from the legal side and that kind of thing, then you don't want just a lawyer. You want a lawyer that is very familiar with this kind of project, this kind of raise, and yeah. So we. That's why actually even one of the reasons why we are in France. Yeah, no, I know that there are a lot of very interesting programs for entrepreneurship in EPFL, but we were not part of it.
Okay, thank you.
Excuse me. Excuse me, I have a quick question, please. Did you file some kind of authorization in front of the French financial authorities because you're offering some kind of financial product? Or if not, were you able to bypass it? Or did you do it in another country?
So, tough question. So basically, you're right when you say that we're building something that is quite similar to a financial instrument. And not only us, but the whole ecosystem. And the thing is, you have different financial regulators in each country, whether it is IMF or FINMA or that kind of thing. And depending on what you do, you're still a bit in the gray area. So we don't have an IMF authorization, but we are helped by, we are checking everything with our lawyers, and those people are the one being consulted by those financial authorities currently to try to make a regulation in a field that is yet unexplored. I would not be able to give you too relevant information because I'm not the lawyer, but I can give you his contact. No, but yeah, that's something legally. It's quite a gray area, and then eventually, law is. what I have been explained is that there are a lot of things that are quite intuitive. If you're working in a gray area, it doesn't mean that you can do anything at all. But you work with trying to assimilate those new thing to the past thing, and just try to do things correctly. And you need help from very skilled people at every step to try to to forecast what will happen, and also have a plan on what you will do in situation depending on the color that will appear instead of the gray. But yeah.
Yeah, thank you for your answer. Because I heard that France was kind of open to this kind of businesses, but it's true that there is kind of a gray zone.
I mean, to be fair, a lot of countries are open, and they know that if they are not, they will restrain potential innovation. That's on the regulatory side. That's on the fiscal side as well, and so yeah, I mean they did allow for ICOs back in 2017 that make the process of doing some kind of public raise very easy, but we started with a seed, so it was a private sale, private investment. But yeah, I mean, it depends what you do. If you do a centralized exchange, it's quite different from what we do as well. Then they go and they make a measure, they withdraw them, they put new ones, and but eventually we just have to continue building, try to not do anything shady, and try to see how we can fit in the regulation when it will be done. Yeah.
Maybe David can say us a bit more about this.
Yes, so I'm not really comfortable with French law, but well, to speak about Switzerland, so Switzerland wants to be innovative and sustainable for companies, so especially also in the blockchain. So we have the canton of Zug that is called the Crypto Valley. And so in Switzerland, we quickly decided to adopt a law on distributed ledger technology. So there is no blockchain law as such, but there is an act with some targeted adaptation on several different laws in Switzerland to be, we'll say, compliant with blockchain and cryptocurrencies as such. And yeah, there is the idea behind that is to increase the legal certainty, so for investors, but also for financial markets. So the financial markets have we'll say the objective of ensuring its proper functioning and protecting the market and also the investors. So there are a lot of, we'll say, laws about that, but there is no DLT law, but only some specific rules about that in different federal acts, we'll say.
Thank you, David. And I had another question for Gaspard. What are the things proper to the crypto system, to the crypto in general, in this particular ecosystem?
Well, I mentioned a few ones already. One being the flux of money going a bit everywhere at the moment. The fact that you depend quite much on the market, meaning that, for example, when you raise money, you're not raising money for just like the time that you think you will have to develop something. You also have to take into account, we'll go into a bear market, that will be much harder then, and that kind of things. The hiring process is quite tough because you're searching for profiles that are quite demanded. The regulatory side is definitely something that is quite complicated, and you have to choose between, a lot of projects are being launched with anonymous founders at the moment because they're just like, I just don't want any trouble, and we decided to be in the train of the people that said, we'll try to do it. We'll do it publicly. We'll try to be legal at every step of the way, and then eventually the law will fall on us and like ask for example, KYC on all the platform. And then at the moment we'll be in the same train that a lot of people that choose to do this choice, and that's something that we prepared. But that's one thing. The law. Just the way you handle the money as well. Most of our treasury is in cryptocurrencies, so stable coins deposited in different pools because we have around $8 million of liquidity of our own token in different pools. So that's something that you have to handle, but it's actually quite easy. Those first.
Okay, thank you. And how do you anticipate the evolution of this space?
Well, I don't have a crystal ball, but of course I'm dedicating all my days, all the time to that project, and I own cryptocurrencies for like at most 10 years, and that's something that I'm passionate about since then, and I tried to do things before APWine as well, like Blockchain Student Association, APFL, that kind of thing. So if I'm doing that, it's because I believe that there is a lot of value added for society, and that's a very interesting subject. So I'm quite confident about that. I think it works in phases, in market phases. Everyone hears about NFTs, everyone hears about Defi, everyone hears about ICOs, and eventually all those things stays, but they evolve, and just that you have phases where it's completely crazy, and then it calms down, and everyone loses money, and then it's crazy again. But eventually, at each new step, when you look back, you're like, okay, there are a lot of changes, a lot of progress. Even cryptocurrencies in 2013 was not the same to use than it is now. It's really easy. And then you have something else, which is that at the beginning, it's a bit like, it's quite utopian, it's quite like a counterpart thing, which is good, I think. And then eventually, in DeFi, I mentioned like the arbitrage that we can do with the financial environment that we have now in the traditional side. And the thing is, currently, projects, including yourself, are trying to talk to institutions as well, because arbitrage is about making profitable paths, and to build profitable paths, you need to be plugged to huge liquidity, to huge systems that are actually working a lot currently. And so that's one thing. Like it started to be institutionalized for a few years, and people are talking to institutions, and it's going more mainstream, and I think it will continue that way. And I think, of course, on the regulatory part, there are a lot of work to be done, very hard work. Good luck for them. But yeah.
Thank you. I also had another question about the beginning of your company. So what are the background needed to start working on this kind of subject?
Well, I know people that are CEOs of a DeFi project, and they were lawyers before. You still have a chance. And people that had like computer science background, and that's the case for us. We were three computer science students, so it was good for us, and we were already in this ecosystem, so it was easier for us. But eventually, you don't need to have a particular background, and more importantly, if you want to build a company, then you need all backgrounds. You need people that do marketing, that do finance, that do law, you need accountants, all those profiles that are needed in every types of company. You need them as well. It's just that at some point, DeFi was more on the technological aspect, and now that we're moving forward, like we're actually hiring people from like very knowledgeable people in traditional finance, because we're building a product that is quite similar, and so we don't want to reinvent the wheel, and we need all those theoretical aspects, and so we need their knowledge as well. So, but at first it was mostly technical. Mostly, we had our user experience, our DeFi user experience, and our technological background, and our crypto background, and then we just started with that.
Okay, so you mentioned that you were 3 at the beginning, and how much are you today?
We're about 10, and we are still trying to hire more people.
Okay, and you're still based. Your company is based in France, but you're looking to be based somewhere else.
So for me, it's the boring stuff, because I'm not the lawyer. But yeah, the structure of the company is changing for different aspects, whether it is So basically, we're trying to. I mean, we are opening a Swiss branch So we'll have the company in France and the Swiss branch as well for now, and then it can evolve because those are things that evolve a lot.
Okay, thank you. So I have another question about for David. So what is really the difference for the blockchain between like Switzerland and other countries?
Well, that's a tough question. We'll say there are countries like Switzerland and Europe in general that are globally for the innovation and to create sustainable companies that are leader in technology. But there are some other countries that are kind of well, there is a closed door, we'll say. They are not trusting in cryptocurrencies and blockchain. So it's really evolving. So it's difficult to say, this country really don't want to have some cryptocurrency. There are some, but globally, I think that most of the countries are pushing innovation, and they want to have companies leader in the blockchain or distributed ledger technology. So to say we have the best companies in these areas, and it's a bit the competition. Like we can look at the United States, they are always saying they are the best at the top of the technology, but we have other countries like China that are also good competitors. But yeah, there's a kind of war about that. But yeah, it's difficult to really say, this country really doesn't like blockchain, who doesn't want to have companies in this area. I don't know if you have inputs about that.
I mean, I agree with you. We do have some countries that are like very skeptical about those technologies, and we have countries that are like, let's make Bitcoin a legal tender. So the two opposites. And then the regulators works differently, depending on the country. I would correct me if I'm wrong, but like usually you have agreements. Like for example, in Europe, even in Switzerland, it's mostly the same thing. They have different means, different things, but it's mostly the same thing. US is quite different. US is the big guy with a lot of means, and you don't want to be attacked by the US. But actually, a few weeks ago, someone was subpoenaed at the crypto conferences. But yeah, regulators have different profiles, but in Europe, it's actually pretty cool. Like the country like this kind of innovation, and eventually, if they go against people, it's to protect usually the majority. So if you have a very not educated audience, users, then you're more. It's more likely that they come after you. If you do videos of ICO promotions on Instagram, then it's different. Yeah. So yeah, that was my input.
Thank you very much to both of you. So I think now it's time for the questions. If you have some questions, because we don't have much time left. So.
Yeah, Gaspard, in a more local question, you say that you haven't used any, EPFL system or because you come from EPFL as a background, computer science students, you haven't used any incubator from EPFL, but you were still at EPFL for 5 years, if I remember correctly. Do you think that it helped you, like the people there, the blockchain student association that you created?
Well, I know you know it, but I dropped out at the last semester of my entire bachelor, and but honestly, yeah, I learned a lot. I met the co-founder with who I'm working currently. I met a few people on the academical side, like teachers, and so it was just not about the diploma, but yeah, it was a very good experience, and I learned a lot of things, not necessarily during the courses, but with the whole student experience and people that you met there.
Well, firstly, maybe let's say that the fact that you dropped out on your last semester made the legend of other big companies. So we may never know.
To be fair, I would have preferred to finish my bachelor. I spent 5 years doing it, but now I had to make a choice, and I don't regret it. But if I could have finished, I would have.
Yeah, I've got a question about you about like these aspects of not EPFL but in general like research in blockchain. It's such, as you said, it's such an evolving field, and normally in like traditional industries, there's like always a mix between researchers from university, startups, and big company researchers. And how is it in like cryptocurrencies and especially DeFi? Because I felt that there's so much thing about moving and evolving, and I feel that for one time maybe the academical research is maybe a bit behind. I don't really know.
Well, to be fair, before APWine, I published a paper with a teacher actually on arbitrage and some kind of decentralized exchange. And I was working on a research project with other teacher at EPFL or in the UK. And those people were chief scientists in big blockchain project. And to be fair, I think it's still quite linked. It's just that, and even at the beginning, the white papers were like, could almost have been like academical research. It's just at some point during the ICO mania, they knew it's just, you know, a pitch deck. But no, I don't think there is room for research, and I think it's actually the case. And there are a lot of people working on both the very theoretical side and the very concrete side. But that's a different layer as well. Like currently what we're doing is quite related to finance. So if we have to have research, it would be on the financial aspect. And there are research there for DeFi, like a lot of research actually. And before there was more research about like blockchain as the layer one thing with the consensus algorithm, with the cryptography, with all those kind of things. But I do think actually the research part is quite important in the space.
Yes. You said you only had like somewhat of a bachelor starting. So in these first months, you probably didn't have much experience in product development or product management. So were you still able to like provide some processes, or what was your progress on that?
I mean, you're right. I did not have any experience in that, definitely. And I had to learn. And you know, you make mistakes, you learn things, but it went pretty well. But that was what is really interesting as well, having a concrete experience. Like you just try, and even if it failed, then I would have learned a lot. It would have been too bad for my EPFL diploma, but still. So yeah, I would say that to start something, especially at our age and like in this context, you don't have to be like a very experienced person in all those fields. Eventually, you need one thing, which is you need to be surrounded by the right people. And so our lawyers, our accountant, our advisor all helped us a lot in all those processes, and we learned a lot, and we did not do too many mistakes because of them. So that's a very important thing, I would say.
Thank you. Did you have an MVP to present to the first investor?
So the angel investor.
Yeah, exactly.
We had like a draft of interface, I think, and the smart contract, like the very first one. Yeah, kind of an MVP. Yeah. I think we had an MVP.
Okay.
It was not demonstrated during this 15-minute call, but but yeah.
Okay. And so what I understood is that you made an ICO for APW tokens.
So it was not an ICO. I mean, legally it's almost the same thing actually, but it was a liquidity bootstrapping event. So we were not selling token directly. We seeded a liquidity pool with that, and so that but that's still selling token, and that's still like accounted like that in the law. It's just a bit different process. Like at the end of the process, you don't necessarily raise money. Actually, you have just liquidity seeded on an exchange, and it's hard to go into the technical details, but basically you want liquidity to be public, and so you put a lot of APW on one side and a small collateral in the other side. And during that process, people are filling up the collateral, buying APW token. And so at the end, you have a 50-50 seeded liquidity on the pool, and in the process, you can make money as well if you have enough people buying. Yeah.
So it's like farming
It's not farming. It's mostly seeding liquidity, and so at the end you own this liquidity, which means that you have it in your treasury, you can sell it and all. But eventually that's not what we did. We kept that liquidity on the decentralized exchange, so we still own it if we want to use it. But the goal was to have liquidity for the token on a decentralized exchange at first. And so, as I said, currently we own around like 8 million of liquidity on different decentralized exchanges, but we are starting liquidity mining programs and partnership with other projects, whether they are like a decentralized exchange or platforms, so that they can list the token, and we incentivize the community to bring liquidity there, so that eventually we have a more liquidity, community-owned liquidity. Yeah.
Okay. And how are big, let's say, players with more than 100 of employees managing their assets in such a volatility market when they are doing an ICO?
To be fair, I don't know if there are that much projects that did a public raise with 100 employees. Usually it's small team still. If you take the biggest protocol, like, and there's something a bit different there. If you take the biggest protocol like Aave, they still have quite important teams, but on very different aspect of the project. And you have project where you don't have hundreds, but like a lot more people, but they are not employees. They're community members contributing to the project, and sometimes they are rewarded for that. So grants, that kind of thing. And that's actually a process that it can seem a bit naive, but that's actually like the goal if you want decentralization, and that's something happening in quite some protocols as well. But from the public raise, 100 employees seems a bit much.
Yeah, for sure. But I meant like more, let's say, after a couple of years of operating within the industry, let's say.
Well, I mean, the thing is, if you survive a couple of years, then either you're big or you're dead currently, and we don't have too much. It's hard to look back in such a short time period. You have still big players, but I think not more than 100 employees, or then it's really decentralized on sub-project and that kind of thing. But we have a project with a very good community and thousands of people contributing to the project in different ways.
Okay. Well, thank you. Because I think that at some point it can be really difficult to manage those assets, for example, the tokens, with the volatility and so on. We know you have this high number of employees and so on.
Yeah, but I mean, maybe I did not understand it correctly, but why we don't manage that much asset? Like, we have our treasury and different types of asset, but we are not doing investment per se. So like, it's the company is building its thing, and then the people, you have a lot of investors in the space. I'm an investor as well, but like, I do that in my free time, and I don't have any employees for that.
Okay, thank you.
Are there any other questions?
Yes, maybe one more question. Yes, so we've seen a few waves of like narratives in DeFi. There was DeFi summer, as you said, like financial products, then NFTs, more towards art, maybe now a bit more towards like gaming and such stuff. What do you think will be or maybe some ideas for the next waves?
Well, I need to get my crystal ball again, but I mean, one thing that I mentioned is it's not like after a mania, it's not the end of it at all. It's like it will just change a little bit, evolve. People will not be crazy about it anymore, but it will stay. So I think we will still have NFTs and ICOs and DeFi. I mean, at the moment, you have a very interesting subject like scaling solutions. Like we had like this sidechain thing where everyone was releasing their sidechain, and eventually you have projects that are deploying there, and so. But at the end, there is the scaling issue. So the scaling projects are becoming quite popular as well, like Connext, what is Starkware building, ZK Sync, all those things are very, very interesting. Then I don't know what will be the next mania, but it's like currently it's a bit a combination of everything. You have NFT with gaming with DeFi at once, so, and it's interesting. And actually, if I can speak about DeFi, one thing that we are currently seeing is like another layer of product that are being built. So like DeFi on top of DeFi, basically. And so it's mostly about capital efficiency and building more complex product and instrument. And I think that's something that that we are starting to see, and with very, very interesting project there as well.
No other questions then? Okay, so I have one last question, just to resume. So in the theme of this event, so what was like the hardest challenge you had for this startup?
So the hardest one is I mean, like, if I look at the past year and I say what was the most annoying thing, I would say finding the right person to join the team, like hiring and audits. But that's very lame. But like that was very frustrating. And then, the challenge of building something like that is that you actually have to. And we were lucky about that. We're very happy with the team. It's working really well. But you are under a lot of pressure, and in an ecosystem that puts you a lot of pressure on top of it. So, yeah. But that's the thrill of it as well. I would say audits. Yeah, it's very boring.
Okay, thank you very much to David and Gaspard, and thank you again, GEW, for hosting us today.